You're listening to the SBA Loan Experts Podcast, your source for information, tips, and education on the SBA loan program from SBA expert Chris Hearn, founder and CEO of Fountainhead, the nation's leading non-bank SBA lender. Here's your host, Chris Hearn.
The SBA's Office of Advocacy released some data that I think is pretty important. And it's from 2018, which I guess is the most current year they have. But veterans own nearly 2 million small businesses in America. And of those, they employed 5.2 million people in 2018. And the total employer sales of veteran-owned small businesses reached $1.27 trillion in 2018. They also had an annual payroll, veteran-owned small businesses, of $232.6 billion. So it's a pretty big piece of the entrepreneurial community that takes place from veteran owners.
If there's one thing, veterans, when they get out of the military community, where they try to start a business in the military when they get out, there's one thing that we usually don't have a grasp of or a very good understanding of, and that's money. I mean, right. We understand what getting the paycheck is and going and spending it, but we don't understand money is a very high finance is a huge thing. And most folks in the military don't get much experience we know how to spend money and how to figure out how much money's left in the budget before the end of the fiscal year that we got to go blow before the end of the fiscal year. But we don't understand high finance and the power of money. Well, talk a little bit about like your philosophy and how important it is to understand, to have money on your side.
Well, I would say I know this intimately because my son is now a U.S. Marine and he's now having to budget, and he continues to tell me, hey, I don't have to cover housing and the room and board basically. And I said, yeah, but you got a lot of other stuff you got to keep track of. So I think what I see is we've been financing small businesses. I've been in this industry for over 23 years now. I've financed literally hundreds of thousands of small business owners, particularly during the pandemic with PPP. We were the 6th most active lender out there. But I really like to finance veterans. I like to get them on the journey to entrepreneurship. It's no secret to you, Joe. I mean, obviously veterans tend to be much more disciplined than the general populace at large. They're used to sort of operating on fairly rigid systems, processes, things like that, which actually works really well in the franchise world because that's what you're buying is sort of a business in a box. If you follow the rules, follow the system, you should get replicatable results. So, but in general, I find that's both a good thing and a bad thing. And what I mean by that is sometimes veterans can be a little more rigid than the entrepreneurial space would require. And what I mean by that is entrepreneurialism is ever changing. No days are the same. And it really takes a certain knack of adaptability. And while that does work in some places in the military, it doesn't always work in some places in the military. So, which is why I've seen some of the best success happen with franchises, with a veteran wanting to purchase a franchise. And by the way, the name of the game in franchising is you're not going to make a lot of money with just one location. You have to do multiple locations to really get those economies of scale. But, to your point, I mean, I don't know that SBA financing is high finance, but it's certainly much more beneficial than a lot of the other options that are out there for a veteran trying to own a business, whether they want to acquire a business or start a business. If you go the conventional ordinary bank route, it can be a lot more challenging. Oftentimes, they don't like to finance startups. If that's something that your audience would be interested in, they oftentimes don't finance business acquisitions, which of course is an easy way to get into ownership of a business. But, and then oftentimes they have much higher down payment requirements, much shorter terms, which impacts your cash flow. So I just find that SBA financing tends to be a lot more user-friendly to the typical entrepreneur who wants to get in and start a business.
Can you explain a little bit about what the SBA lending process is all about? So, and the relationship, where do you come in? You're an SBA lender, and people think of the SBA, Small Business Administration, as, oh yeah, you go get a loan from the SBA. Well, the SBA doesn't actually loan money. And that's where guys like you come in.
Yeah, they don't loan money at all, except for when a tornado levels a town in Kansas. They do show up and they hand out checks along with FEMA. But in general, SBA does not lend any money. It was kind of a weird situation over the last couple of years because a lot of business owners are able to get EIDL loans. Those are disaster loans. And that is what is lent directly from SBA. That's similar to like that Kansas town.
Mm-hmm.
But in general, SBA doesn't lend money. It's a good thing. They haven't lent money since the 1980s. It was a disaster when they did. So what they do is they work with private sector lenders such as myself, and they basically guarantee the funding that we do. They give us what's called a government guarantee. It's basically, think of it kind of like an insurance, that they've got on the loans that we make. And they're not 100%. Typically, the SBA 7A, which is the largest program, it's the most versatile SBA loan, that typically has a 75% government guarantee. So the U.S. taxpayers helping us perhaps take a little bit more risk than we otherwise would, and in return, we've got a 75% guarantee on that loan should it go bad. We still have risk, of course, and we share that risk with SBA if we have to liquidate. It's a 75-25 split on the proceeds. So, but it allows us to do things, I guess, a little bit better than what you would get from a bank. What I mean by that is we're able to go a little bit longer on the repayment terms. We're able to take a much lower down payment. We typically don't have any loan covenants, which nobody cares about that in good times, but in bad economic times, or as we're headed towards bad economic times, people start to learn how powerful a bank's loan covenants can be in terms of them having the right to kick you out of their portfolio if you don't meet certain covenants, and just a variety of different things. So those are the real benefits, I think, of SBA lending. 7As can be used for business acquisitions, can be used for startups, working capital, buying out a partner, equipment financing, owner-occupied commercial real estate financing, anything related to a franchise. I mean, it's very, very versatile. The other program that SBA has is what's called a 504, and that's almost exclusively related to owner-occupied or owner-operated commercial real estate. So those are the two main programs from SBA.
What is it that the SBA and the lender are looking for from a business owner if they want a loan, if they looking to get a business loan? Like, in other words, if you're the business owner, or we can talk about buying a business here in a minute too, which is a great thing. If you're a business owner, what do you need to look like, and what do your books need to look like in order to be successful at getting an SBA loan?
So I would say SBA has guidelines for private sector lenders like us. And by the way, we're a non-depository institution, so we have a special license from the government. There's only 14 entities like us, 8 of which of us are for-profit. So we don't operate like a bank or a credit union in some respects, because we're not looking to move your accounts to us or provide other banking products or services. We're laser focused just on providing SBA loans. So
and
what
does that
means,
give you? Yeah. So is that a benefit to someone looking to get a business loan?
I think it is, because, we don't have some of the constraints that our competitors do. We are much faster than a bank in terms of approving a deal or closing a deal. We have much higher touch service than a typical bank would, where you might be a number. For us, it's very meaningful. We don't make any money until the transaction closes. So you can understand that we have the same sense of urgency as most of our borrowers to get to the closing table.
Okay.
We're super specialized. This is what we know. I think we're the best at what we do. Banks oftentimes are offering 30, 40 different products and services. It's kind of the jack of all trades, master of none concept. And then we're just very sincere in terms of what we do. We're very passionate. For my team and I, this isn't just about a paycheck. This is about trying to expand prosperity through entrepreneurship. That's what we're passionate about. We think that entrepreneurs have done more things for our society than any politician probably ever has. So it's our responsibility to try and help expand this sector of the economy that employs almost half of all Americans in the U.S. And a lot of people don't realize that. So that's how we differ. I call it the 4 S's, speed, service, specialization, and sincerity. I might have come up with a 5th S a couple weeks ago, Joe, called soul, but we can talk about that some other time.
Yep.
But to your question about SBA and what it's looking for. So what we do is, because we're so specialized in this, we don't overlay an internal credit policy on top of the SBA's SOP, standing operating procedure, which is what a lot of banks and credit unions do. It makes us kind of unique. So in that regard, we do have a minimum FICO score, for instance, but SBA doesn't. Okay. A lot of the people we compete against have a very rigid FICO score. And if you're below that, you're on automatic decline. For us, we can be a little more flexible. Our minimum score is a 620, but have we financed people in the 580s, 590s? Sure, but it's a story, and we've got documentation that backs up the story. So we can be a little more flexible in that regard. Another thing that SBA looks for particularly if you're an existing business, but even on a projected basis, if you're going to start up a business, they want to see a minimum debt service coverage ratio of 1.15 times. Now, before your eyes glaze over, what that means is that the business throws off enough cash to service all their existing debt on an annualized basis, plus the proposed debt. So think of it like they want to see the business throw off at least $1.15 for every dollar of debt, annual debt payments, if that makes it simple. Okay. And so they want to see that historically on an existing business, or they want to see that on a projected basis on a startup. And if it's a startup, then an applicant would have to submit a business plan as well as detailed assumptions to back up the financials in the business plan. If it's just an existing business, that's not necessarily going to be the case. Although if you acquire an existing business, again, SBA wants to see a business plan with detailed assumption on a go-forward basis. So those are some of the things that they're looking for. Other than that, they want to see at least minimum injection in most cases of 10% of the project cost. So, but we can work with, if you're buying a business, if there's a seller involved, obviously, we can work with you to try and have them put up a seller note for up to half of the down payment. That happens a lot. We do a lot of business debt refinances or consolidation. In those cases, we don't need a down payment. And that's just us basically improving the overall cash flow for the business by refinancing existing business debt and re-amortizing it. It makes a big difference.
Yeah.
So those are some of the things that I would say, Joe.
What's the rule of thumb you use in your lending to value a business? Is it a factor of revenue, a factor of profit?
It's a combination of things. There's no precise formula per se, and I'm not somebody who evaluates business values for a living, but we know enough to be dangerous, I suppose, and we know enough to verify the information that we're given. So typically small businesses are sold as a multiple of EBITDA, earnings before interest, tax, and amortization, depreciation, amortization. So, 3 to 4 times is often fairly normal. But again, it really depends on how much recurring revenue, how long do they have contracts? Are they long-term contracts? Is there a diversity of the revenue stream, or does somebody have, 85% of their gross income comes from one government contract? That's problematic. So, what's their net margin? How long have they been doing this? What kind of competitors they have? Are the competitors large or small? I mean, there's just a variety of things that goes into this. If they're more IT related versus something that's a little more tangible of a business, that can cause an issue in terms of the valuation. So there's just a variety of things. And I would go back to something you said before, which is, business owners, when they're done, when they're ready to hang it up, right? So maybe you're a dentist and your back's hurting because you've been bending over for 30 plus years. I mean, there's really only a couple options, right? So you either shut down the business and that's it, or you sell the business, or maybe you could gift it to your kids. That's a whole nother tax strategy to do. But, most business owners, all these baby boomers are going to be retiring. They would like to get one more bite at the apple and sell the business. So that's where all this stuff comes into play. And there's going to be a tremendous amount of businesses that are going to change hands over the next decade. And it's a huge opportunity, not just for somebody who wants to get into this space and wants to be a business owner, but even someone who's an existing business owner. There's going to be opportunities to buy a competitor, to buy someone down the street that could, improve a new business line for you, a variety of different things like that. It's a pretty exciting time, and that's why we've gone so heavy into financing business acquisitions, because it's a huge opportunity, and there's not that many lenders out there that are really buoyed up about doing this.
Cool.
Hey everyone, thanks for listening to today's episode. Be sure to subscribe to our podcast to be notified weekly of new episodes, and head over to fountainheadcc.com for more about our SBA 7A and SBA 504 resources. Also, give us a follow. You can find us by searching Fountainhead on any of your favorite social media channels. Thanks again, and we'll see you next week.
Today's episode is brought to you by Fountainhead, the nation's leading non-bank SBA lender. Fountainhead's team of SBA experts will guide you through every step of the process and get your loan closed faster and more efficient than any bank. Apply today online at fountainheadcc.com. Thanks for listening, and we'll see you next time on the SBA Loan Experts Podcast.